Hello, good morning, good afternoon, good evening, based on the time you're watching. This video belongs to a series with an aim to educate the masses on the very basics of sustainability and its related topics, including their actions and impacts. No prior knowledge of any subject is required. Let us explore today's topic. As we understood in the 1.5C challenge video, we need to reduce carbon emissions from the atmosphere to combat climate change if we need to keep it in the limits pledged in the Paris Agreement. There are different measures to reduce these emissions: carbon capture and storage, energy efficiency, renewable energy, waste reduction, and forestation, to name a few. Since we cannot manage or control what we cannot measure, we need to account for the emissions released in the atmosphere to find out how we can reduce them and what is the realistic reduction target. Large corporations and manufacturers are the biggest consumers of energy and resources and hence the biggest polluters too. To calculate the emissions released by any entity, there is a standard protocol widely used around the world called GHG protocol to measure and manage emissions. It was put forward in 1998 by World Resource Institute (WRI) and World Business Council for Sustainable Development (WBCSD). With ISO 14604 adaptation, GHG protocol became the international standard for corporate GHG accounting and reporting. GHG emissions are categorized as scope 1, 2, and 3 emissions. This term first emerged in Greenhouse Gas Protocol of 2001. Let us understand scope 1, 2, and 3 emissions and their importance. Scope 1 refers to the sources of emissions that an organization or reporting entity owns and controls directly. For example, burning fuel in fossil fuel powered vehicle owned by the company. Another example is when a company uses a generator on a construction site to produce electricity on a temporary basis during the construction process, and etc. Scope 2 are the sources of emissions that a company uses indirectly and come from the purchase of energy. The emissions caused by burning coal, oil, or gas to produce electricity by the production facility which an organization uses to fulfill its energy needs. Scope 3 is usually the most complicated one. They refer to emissions which are not produced by the assets owned by the company, but is indirectly responsible in its value chain both upwards and downwards. Any material used by a company to process or manufacture a product is being extracted and transported to its factory, and those emissions emitted during extraction and transport fall under Scope 3. When a manufactured product is transported by a supplier to the consumer, and consumer uses the product until the end of its life, releasing emissions in the atmosphere, all these emissions fall under Scope 3 category. Similarly, a big chunk of emissions of a rental car company would fall under Scope 3 as its customers are using the vehicles. Now comes the golden question: what is the purpose or benefit of GHG accounting? If all companies are able to account for their emissions, they will be able to identify opportunities to reduce emissions, which is our primary target. For instance, an entity would know about its direct emitting sources in Scope 1 and can put its realistic reduction targets. Many companies are reducing their Scope 1 emissions by using hybrid vehicles instead of fuel powered ones. In previous example, a company can use renewable energy to power part of the construction site. Similarly, a company can put energy efficiency measures to reduce Scope 2 emissions and set realistic targets to reduce their consumption. It will not only help the environment but also reduce their monthly bills. Although it's hard to identify Scope 3 emissions, bigger players in the market with a large supply chain can bound their downstream contractors to follow certain reporting standards. A downstream supplier's Scope 1 emissions can be verified and counted as Scope 3 for the upstream entity. Our goal is to reduce the GHGs in the atmosphere, and everyone must play their role. A combined effort on a global scale where all countries are on board can help us reach the climate goal. GHG accounting, reporting, and realistic reductions based on these findings are going to play an important role in achieving the targets set in the Paris Agreement. Thank you for watching up to this point. If you want me to discuss any other topic related to this subject, please mention it in the comment and I will try my best to come up with a short video covering the basics. Have a good day.